Hey, thank you for tuning back into another trading review. I took a short trade today on ES futures, somewhere around 9:40. I think it was 9:44. I had planned for about only a 6 point loss on this trade, and ended up getting swept out for I think it was close to 11 point loss. Um, Overall, honestly, it was just a poor trade today. The reward for the risk that I was taking was not worth it. I was only targeting a low a day break, and low a day was only 8 points away. So I was making like a 1.5 risk to reward ratio. So overall, not a great trade taken, but I'm going to start out with a Bible verse that I've kind of felt connects kind of to this. It's Luke 14, verses 28 to 30. It says, "For which of you desiring to build a tower does not first sit down and count the cost, whether he has enough to complete it. Otherwise, when he had laid a foundation and is not able to finish, all who observe it begin to ridicule him, saying, 'The man began to build and was not able to finish.'" The passage is a parable from Jesus about the importance of counting the cost before making a commitment. The core meanings behind this are the preparations. Just as a builder must ensure they have the needed materials and funds to finish a project, followers of Christ are called to realistically evaluate what discipleship requires. The other core meaning behind it is avoiding half commitments. Jesus emphasized that starting a journey and abandoning it midway is worse than never starting at all. So, if we tie this into trading, this is translated to trading to basically mean that you need sound risk management. You need to calculate your max risk. Never enter a trade unless you know the exact stop loss and the target you have planned. Always assess your mental capital. Counting the cost, meaning if you possess the mental fortitude to endure losing streaks without acting out of fear or panic or revenge. So basically, it's just kind of just talking about making sure that you're not risking too much and that whatever you do risk, you have the right reward for it. Um, so that's just kind of the Bible verse that I kind of felt spoke to this today. Kind of just was overall poor risk, poor reward. I just didn't have the right capital planted where it needed to be. So that's just something I needed to learn and continue to grow in this trading process. Now, as I went back and reviewed the trade today, I realized that overnight we were holding, let's see, weekly volume point of control, overnight volume point of control, and yesterday's volume point of control. So basically, all the areas where all the volumes being transacted by all these institutional buyers was being held. We tried to break below at the opening of last night. We rallied above, held it, pulled back into it, held it again, pulled back into it. My morning plans were basically, what I saw this morning was we failed to break above yesterday's value area high multiple times, but I didn't take into account all the volume point of controls that we were being held overnight, showing that those large institutional buyers were willing to continuously support price at these ranges. Um, and aligned with these volume point of controls where there's volume ledges right here seen on the candlestick chart right here about 74.96 area. So as we pulled back into there this morning, we held it perfectly and just rallied. And at this point, I kind of had a short bias. I was just really looking for us to fail above this value area high again around 75.04, 75.05 area. And as you can see here, we had large aggressive buying stepping in, but they weren't being rewarded. There's lots of aggressive selling, but Delta still kept moving higher. But I allowed myself to get kind of blinded, putting my blinders on, not able to see that we were holding above 7,500 psychological whole number. We were holding above these volume points of controls, and we were holding above VWAP. So overall, the short thesis should not have been taken. And I just recently started using gamma exposure levels, so I kind of realized that all the institutional people who were hedging against their option positions were also following a sort of an uptrend where they'd buy and rally or buy on dips and sell into rallies. So overall, it was low key it was just a poor trade. I mean, when I took the short, I had I think 6 to 7 point stop loss, and I was only targeting 8 points. I wanted to see a low day break. There really was no other spot to see until we got below, 79 or 74.94, and we went to go retest the low of day. But coming up here in a second, you'll see we started to break above, and the 75.08 level right here started to align with the weekly value area high. So in my mind, all I could think was regular trading hours value area and yesterday's value area combined with weekly value area high. If we rejected it, we should sell off. Now, I was used to the volatility that we had yesterday because we moved about 20 some points in the first couple minutes of the market, and today we only moved 14 points in the first like 15, 20 minutes. So I think I just failed to. I think I just kind of failed to. I can't think of the word. I guess failed to change my risk management with the market conditions that we were facing. So as you see here, we had a strong buyer on the footprint over here at 940, about 232 delta outlier. And we made a high a day around the 75.09. And at this point, I was just watching and seeing if all these offers up here could be filled, all these passive sellers getting filled. I guess another sign, if I would have zoomed out just a little bit in this market, seeing all this aggressive selling in this market as well, and we're still moving higher, should have also been another sign to not really focus so much on these shorts and kind of look for opportunities to get long in the market. When we first opened up, I kind of wanted to look to long around this 940 area, as we did see slight signs of absorption, but we also were still below value area high, and we were inside of the regular trading hour value area, so I really didn't want to long into that. It's kind of against my rules. But as you see here, we created that high around 7510.5, and we still continue to make higher highs. I mean, higher highs in delta, lower highs in price. And I got short right here after I started seeing this aggressive selling step in. Stop right above the highs, and that, it was once again another late entry on this trade, just like yesterday. I probably could have gotten in short around the 75.06s when we made a lower high and delta was pushing higher. But after I got in at this point, I had my stop and my risk evaluated, but I really did not have much of a target. I kind of just wanted to get short to get short. So that was, a fault of mine right there. I mean, I should have really looked to see getting short of 75.04, targeting 74.96 was not ideal. If I would have gotten short like 09, it could have been like a 13-point reward for like a 2-point risk, which would be more worth it. A little bit better in case you continue to lose these. But I was confident in this trade as I saw the absorption. We made equal highs in price, and price or delta made higher highs. So I was just sitting in the trade, not too stressed, not too worried. I was willing to lose the amount that I had up. You continue to see all this aggressive buying, and yet we were failing to break above the high a day. You see all this continued aggressive selling right here at the 75.04 level. Um, you can see that we've been held up there about 3 or 4 separate times. But at the same time, at these highs around 75.09, we were also having this really large aggressive buying, no follow through. So I was still feeling good. I wanted to see 75.03 break to hopefully get below 7,500. And if we could push through that, um, I was willing to hold on to a nice short, go break even once below low a day because we had a call wall sitting at the 75.05 level. And as you see here, we just continue to just range between 75.04 and 75.09. Lots of aggressive buying, still not able to break high of day. Candlesticks looking good. We're rejecting value area high, overnight value area high. We're holding below weekly value area high. So in my mind, I was thinking, there's a lot of passive seller here sitting, buying up or selling into all these aggressive buyers. Now, right here, ideally, I would have really liked to see the 75.03 level break. Um, we have resting offers sitting at 75.15 and 75.11. Very, very, very big compared to the tape right now. I mean, it's pretty thin. And once again, you see at all these lows, lots of aggressive selling, no follow through. On the other end, all this aggressive buying, no follow through. So there was someone building up a position here. I was just patiently waiting, but as I was sitting in this trade and I kept zooming out and looking, I see that there's so much liquidity up here above in the 75.10, 75.15s. And more often than not, when there's liquidity sitting and volume building at these highs, we're looking to break the highs and fill the liquidity so that a larger participant can get in the market and fill all of the position. So I didn't sell early just because I saw the absorption. I saw all this buying not being rewarded at the highs, but it did feel kind of cautious. And I've seen this happen multiple times. It can break in your favor, of course, but you also can have bad breaks where it goes against you. And today, right here, you just continue to see all this buying. We're making lower highs. Delta's just rising. And rewatching this tape just kind of makes me think that as I was in this trade and we continued to fail to break under the 75.04, 75.03, I should have looked to take a smaller loss on this trade until I saw better confirmation to re-enter. Because you see the 75.15 offer that's been sitting here all morning continues just to get redder, which means they're putting on more and more. Then 75.10 right here steps up with a 400 lot offer. And at this point in time, I really was debating on cutting the trade early, but at the same time, I did not want to lose out on making points, which is once again a poor mindset. Um, Not really gonna do much for you in the long run. And as I'm seeing this offer sitting here, it's telling me all this volume building up, and this offer sitting up here at the 75.10s. You got to be careful. Like 300 lots. We go again to retest and sell. Nothing. Each and every time, the selling bubbles get smaller and smaller, showing that there's less and less selling participants. Yep. And then right here, you can see all this selling that's trying to come in, getting shut down, getting bought up. And then as you'll see right here, any second, this market sweeps through, fills this offer right here, swept right through my stop loss and never even hit it. I was down about 11 points and I just ended up selling out right here. There's really not much I could have done for that. I mean, when you swept in a market like that, if they don't fill your offers, those zero prints sat there all day. I was waiting to short into them, but there was no point in time that the market came back and retested those 75 13s. Um, so I took an 11-point loss on this. It was a planned 6-point loss, but also at the same time, the reward for it just really wasn't worth it. Overall, it was poor trade. I could have taken a smaller loss on it in the beginning after seeing all of the consolidation, aggressive selling at the lows getting smaller and smaller. And as we consolidating into a tighter and tighter range, and saw those offers above, should have been a sign to exit the position early and look for a better opportunity to either get short or just realize that we are in a positive gamma environment, which means that these rallies, especially once above the call wall at 75.05, we're more than likely going to hold and continue rallying all day as they did. So that was a trade review for the